Alrighty, guys. We are live. Let me let everyone know in the free community. Alrighty. Looks good. Hopefully everyone can hear me. I know we adjusted some mic settings recently. Alrighty. So today I wanted to go over the wheel strategy. I know a lot of you had some questions. So I want to go over that. I want to showcase the free community and how things are now organized, and kind of just go through some questions and get you guys some answers, all right? Let me see if I can also pull up the chat at the same time here. Let's see, can I pull up our chat? Mute my computer so I don't hear myself talking. Let's see here. Alrighty. Check my phone. Bunch of scam text messages. Alrighty. Let's go ahead and get started here. I'm going to go over the community stuff. Alrighty. So our community is completely free. The description down below will have the link. You guys go ahead and just join. You're going to see admin stuff, rules, welcoming all the new members. We have the help center if you guys need any help, if you guys have any suggestions, and any announcements. So like I made an announcement that I was going to be gone for a little bit holidays. So just be aware of that I'll be on my phone more often, trying to answer any questions or anything or what's going on. But I won't have my full setup like I do today to do any live streams. All right. YouTube, if there's any YouTube video posted or live stream that I am currently doing or have done, the saved recordings and everything will be right here. So just go ahead. You guys can click on here, look back. If you can't make a live stream, you'll see it listed here and you can watch it back. If I post on X, if you're not following me or you're not getting a notification, they will also post here. So you guys can just go ahead and click on the link to see it, or gives you a quick photo you can just go ahead and click on, and the caption. So you'll see everything. If I do a Discord live stream as well, or we just do like a community talk, that'll be right in this live stream's content. Okay. Free section, which is going to be our free resources. That'll get bigger as more resources and things get put in. Chill Academy. So any academy classes that are made by me are going to be completely free. They will be inside the WAP as well. You just go ahead and click there. It'll take you to it. We do have a trial right now, a 7-day free trial for the indicator, which you will have access to. So just go ahead. You'll click that link. All right. Any of our trades will get posted in here. We do have a few bots running some swing trades, which are going to go off like a 1-day candle, and then long trades, which will take you off a weekly candle. Okay. Market analysis. So we got earnings, rate cut probabilities, and the fear greed index will be updated here. And then we have our stock chat room. Okay. So when you click on here, you're going to have the general stock chat room, which is just going to be general talk about stocks. And then if you're specifically wanting to know about certain stocks, like ASTS has some good chat going on, right here would be everything about ASTS, updated charts and everything. So if you're trying to follow only specific stocks instead of kind of trying to filter through all of the chat to find, a stock specific that you're following or want to own or want to know more about, you can actually just go to that stock instead of having to filter through an entire chat room to get the information. Okay. And then they'll be sorted by one tag, which will be whether or not it's in my holdings. Like these aren't in my holdings, and then this SoFi is in my holdings. So you can go ahead and follow those ones specifically if you wanted to. And then we have the crypto chat room. This is going to be one chat room, as most people only follow Bitcoin, Ethereum, maybe XRP, but there's not too much to filter through. So we just went ahead, one chat room, general chat. So if there's anything not related to stocks, you're more than welcome. We can talk about it. Then we're posting profits here. We had a good day with the Rocket Lab. We have had a good past 3 months. Good day right there, right? So good day. So this is where we post our profits. And if you want us to review your portfolio, you can go ahead and submit the application. All you're going to do is go here, submit your portfolio review application, boom. It's going to send you a message, and then you can just go ahead and start your application. It'll send it to me. I will go ahead and review. I will give my personal opinion for educational purposes and not for financial advice. And I'll make a video about it, and none of your name or anything will be shared, but your portfolio will be shared, and stuff like that. It'll ask like kind of age range, so that way someone in that same age can understand, maybe you're in a better position or not as good a position to them, and everyone can kind of compare apples to apples, because no one really knows who out there is doing how well and where, if they are ahead of the game or behind. So that is why that is there. And that's the community, guys. All right, we are growing. This has only been open a week, okay? But we're growing fast. It's completely free, so why would you not join? It's only going to benefit you, all right? Now we had questions about the wheel strategy, and that is what I'm going to go over, okay? So if you don't know what the wheel strategy is, it's essentially, and the way I like to put it, is it's naming your price. What do you want to buy a stock for? What do you want to sell a stock for? Okay. So we can look at a few things, and I'm just going to go over an example. We can go to, is it Oscar? Let's go to Oscar. Let's go to one where I don't already have some drawings on it, actually. Let's go to OPFI. I don't think I have anything on OPFI. We're in a little bit of a nice wedge. Let's see here. I don't have any drawings in some of these. I have a lot of drawings on a lot of things. SoFi, yep, but I can delete this. Won't take much. Alrighty, SoFi, for example, okay. What are we looking for? Okay, well, when the stock was, up here or here, I can say when it was 15, well, I don't want to buy it for 15. I want to buy it for, 12 or 13. Yeah, you can do that. You can name your price to own something. Okay. And same thing when the stock gets up here eventually and it runs, and we get to a covered call point. Okay. Well, it's 24 and I really want to sell it for closer to 30. So maybe I want to get to 28. I can do that. I can say I'll sell the stock for 28, and just so you know, by saying you will do something, I will either buy the stock or I will sell the stock. Someone is going to pay you. Okay. Same way with insurance. Okay. You pay a premium every month for car insurance or homeowners insurance or renters insurance, and you don't use it. You have it and you pay every month for it, but you don't use it. Not every month, right? And guess what? That insurance company is just collecting a premium every month for offering a potential opportunity for you to use their product. Well, that's what we're doing. All we're doing is saying, I will. So let's just go to today's date here, the 27th. Okay. And I'm going to show you how to set this chart up. But here's the bottom, 25. Okay. So right now, you could sign a contract on SoFi saying, I will buy SoFi on whatever day. Okay, doesn't matter. We can go 30 days out, so I think that'd be like January 16th. Okay, you can go 30 days out, January 16th, saying, I will buy SoFi for $25 a share. And if it's below 25, I'll buy it for the 25. And if it's above 25, I don't buy it. Okay, now, Colby, well, why wouldn't I just buy it if it actually goes below? And why, why wouldn't I just wait for that time to happen? Well, it doesn't always just get to 25, right? We might see this stock now rally up to the top where it says 31. Okay. Now, where does this all kind of like, why would I do this strategy? And a lot of people aren't very good at timing the bottom or knowing the direction of which things are going. They don't always have like a perfect strategy in place. So what we want to do and what we're going to take a look at, I'm going to pull over, let's pull over a Robinhood account just because it's the easiest to look at. Okay. There we go. Half screen, half screen. Boom. All right, let's go to SoFi. Okay. So step one of a wheel strategy. Let me pull up my wheel. Alrighty. Step one, sell a cash secured put. Okay. So what are we going to do? We're going to go to a stock and figure out one that I want to buy that's on the bottom half of the band, that is on a red day. Like yesterday was a red day for most stocks, but a red day. And we're going to look to buy it for whatever the bottom band is, okay? Or a 30 delta, okay? And I'm kind of going over a quick review of it all, and then I'm going to kind of dive in a little deeper on each individual stance, okay? But all I'm going to do is I'm going to go to SoFi, trade SoFi options, okay? You can, depending on your brokerage, it'll be sell to open put is a cash secured put, okay? In Robinhood, it's just sell put. Or if you go to the builder tab, cash secured put. Okay. Sometimes they just make it really easy. So I do like that for like training purposes here. So what I'm going to do is sell put. I'm going to go, what I like to do is 14 to 45 days, no longer than 45 days, but you want to find something with a good amount of volume. And typically the monthly expiration dates, which is the third Friday of every month, have the most volume. So those are kind of what I take a look at. So that's 34 days, which falls in the range of my 14 to 45 days. Okay. So we're going to go ahead and do that. And I said the bottom of the band was 25.14. So what can I do? I can sign a contract saying I will buy SoFi for $25 a share if on January 16th the stock is below it. So let's just say we get to January 1st and the stock is at 23. It doesn't matter. All that matters is on January 16th, where is that stock? Okay. So January 16th comes around, the stock is above, let's just say below 25. The stock is below 25. Well, they will pay me right now to sign this contract 89 cents a share to sign this contract. To say I'll buy it. I'm their insurance. I am telling the person I will buy your shares for $25 no matter if the stock is 22, 21, 18, I'm their insurance. They now have reserved the right to sell me their stock for 25. In exchange, they're going to pay me a monthly premium like you do to your insurance company of 89 cents a share. So what does that mean? Well, I'm going to make $89 per contract I sign And what's going to happen with the money? That in order to do this, you got to have money. Okay, it's cash secured put, so they are securing your cash. So one contract is 100 shares. Let me go ahead and just pull this over. 100 shares. You're trying to buy them for $25. So in order to do one contract, you need to have $2,500 for this SoFi cash secured put. Okay, but you are going to make $89 if the stock is, sorry. You are going to make $89 if the stock is above 25. Okay. So if the stock never gets to the price you want to own the company for, then you still get to make money, right? How many times have you said, well, when the stock gets to this price, I'll buy it? Okay, well, put your money where your mouth is. Sign a contract right now saying you will buy it for $25 if the stock gets there. If it doesn't get there, well, guess what? You made money waiting for it to get there, right? I'll make my $89, and we have a tool in our WAP that allows you to calculate all this stuff. Let me pull that up for you so you guys can see it. Okay, I'm going to use the comparison tool. Okay, and I'm going to use the comparison tool with a $10,000 available fund. Okay, so if I plug in SoFi and I say I want to buy the stock for $25 and they're going to pay me 89 cents, and this is going to be on January 16th. Okay. Oh, January 16th, 2026. There you go. So how does this read? Okay. Well, in order for me to even buy this stock, I'm still looking for the stock to go down 8%. I need the stock to go down 8% to even get to my $25 strike. Okay. Total in premium using the $10,000 I have available to me, I will make a total of $356 in premium. Over the course of 34 days, that is $10.50 a day. They are going to pay me in premium. Okay. And in just premium, so let's just say the stock was above 25 on January 16th. The premium alone in 34 days is a 3.5% return. Okay, that is annualized to be about a 38% return annual. Okay, now, Colby, what happens when the stock goes below 25? Well, that's a great question. Okay, because we know what happens if it doesn't go below 25. We don't get the shares and we just keep the premium. Cool. Now, what happens if the stock goes below 25? For example, it goes to 24.50. Okay, I'm going to put that up there, 24.50. Well, remember, no matter what, you get this premium. Okay, you're either going to get the premium when you don't get the shares, and you're just going to collect all the premium. It's going to go, the $350 is going to go right into your account. Or when the stock is below your 25, 24.50, for example, you are actually going to get to own your shares for 25 minus your premium. So 25 minus your 89 cents, they're going to put however many contracts. I think the example was 4 contracts. Where is it? 4 contracts. Okay. So you are going to own one contract is 100 shares. You have 4 contracts, 400 shares at 24.11. So that is how it'll look in your account. It won't look like you own them for 25. It'll look like you actually bought them for 24.11, and then that, you get them Monday because they expire on Friday, the weekend, it's in your account Monday. If the account opens up and you're at 24.50, right, you ended up buying the stock for lower than the price was that day. So now you're in the green. Okay. And then the goal is the stock goes back up, right? So that's step 1. And there is a step 1A and a step 1B, and that's what we're going to show you again. This is the part where there's only 2 steps. And let's just say, right, you did that $25 cash secured put and you didn't get the shares, right? SoFi stayed above 25. It was at 27, 28, doesn't matter, right? You don't get assigned. Well, guess what happens? That $10,000 is right back into your account because they didn't need it to buy the stock. So the $10 is back in your account and you're back to step number 1. Just do it again. Find another stock that is at the bottom of the band on a red day that you can go ahead and place a cash secured put. All right, so let's say you did the cash secured put. Sorry, stuck in my throat. let's say you did the cash secured put and it was below the 25, right? So you ended up getting assigned your shares. Man, getting assigned your shares. Now, step 2 is to sell a covered call. Ooh. All right. Step 2 is to sell a covered call. All right. And what is that? Well, it's the complete opposite of what you just said. You said I'd buy a stock for a certain price and you'll get paid for it, or you'll buy the shares for cheaper. Either way, right? Either way, you're happy. You made money because the stock never went low enough, so therefore you wouldn't have bought. And or the stock went low enough and now you own the stock for what you actually wanted to own it for, or even lower than what you wanted to own it for. So the step 2 portion of that is saying, what would you sell it for? Okay. So now, instead of doing a sell put, you would do a sell call. All right. You can do the same thing, 14 to 45 days, no longer than 45 days. Okay. And I'll go over rules. Man. I'll go over rules and everything shortly after I just kind of go through the general explanation of everything and how I do it. And, there's some rules to follow. And once you kind of know the rules, you can look at a chart and within, 30 seconds, know what to do. And that's what's super nice. It does not take a super analyst to understand what is going on with the chart. It's pretty straightforward. Okay. So instead of a sell put, you will do a sell call, or in this other brokerage, you'll do sell to open call. Okay. Same thing, the 14 to 45 days, but you would wait till the stock is at the upper half of the band, right? Because the lower half of the band, you're trying to buy it for cheaper, right? It's closer to this band, bottom portion of this band. Therefore, you would do a cash secured put. Now we're at the top half of this band and we would want to do a covered call, saying that we would sell the stock if it ever got to this price, which at the top of the band is 31. Okay. Could you do 31? Absolutely. But 31 doesn't pay as much of a premium as it would if the stock was at 29. Okay. Now, I talked about deltas very slightly, okay? But delta is essentially the chance that this happens, okay? So that right here, 25 delta, what does that mean? That means there is a 25% chance, based on their algorithms and everything that they put into the market, 25% chance that this happens, that the stock gets to the 31 and you will have to sell your shares, okay? But a 30 delta is a 30% chance that happens. So I like the ratio of a 70 to 30 ratio. I like 30% chance that I'm going to have to sell my stock, 70% chance I'm going to get to keep my shares, okay? Now, 20% delta or 20 delta is safer. 30 delta is my default. 40 delta is riskier, okay? So right here, 40 delta, I would say 29, right? Well, it doesn't have very much to go. If the top band tells me 31, it is more likely that the 29 is going to happen. But a higher delta, a 40 delta, pays me a lot more. This is going to pay me $1.29 a share in premium versus a 31, which is a 25 delta, or a 32, which is a 20 delta, pays me 50 cents a share, okay? But it's less likely to happen. I'm more likely just to keep this premium and to keep my shares. And if it did get there, I would make more, right? Because we did 29 to 32. That is $3 gain versus giving up 75 cents, right? So this is about 350 in difference, or 375 in difference. But this is making more if the stock does not get there. Right? So there's a balance, of course. You got to know what you are willing to sell something for. The two easiest rules are cash secured put. If you do not want to own the stock, do not place a cash secured put. And if you do not want to sell the shares, do not place a covered call. Okay? 2 rules. So I do not want to hear I said a covered call and I do not want to sell my shares. What do? I don't want to hear it. There are ways to manage a position, but even managing your position can result in still selling your shares. Okay, but maybe you made a little bit more premium along the way. Maybe you got your strike price a little higher. There are ways to manage them. Okay. Now, same thing goes with cash secured puts, but if you don't want to own a stock, do not say you will buy a stock. That's the point of the contract. Okay. Alrighty. So same thing with covered call. So for example, SoFi, I have, and we'll just go with the $10,000. So that's the 4 contracts, right? So I could sign a contract at this 32 delta, which is 30, and I can sign 4 contracts right now. And what will happen is they will go ahead and pay me $360 right now. The second I sign that contract, they will deposit $360 into my account. I can use it to pay bills. I can use it to buy more shares, whatever it may be that you need to use that money for, but you can use that money. But remember, you have signed that contract stating if the stock gets to 30, you will sell your shares on that day. Remember, January 2nd, January 3rd, January 4th, doesn't matter on those days if the stock is at 35, but on January 16th, the stock dropped back below 30, right? That's what matters. Where's the stock on my expiration date? That is what matters most, okay? But they will go ahead and pay me $360. If the stock is above 30 on January 16th, I sell my shares for 30 and I keep 91 cents. Therefore, I actually sold my stock for $30.91, okay? Because they combined. You already got the 91 cents up front. If the stock does not stay above 30 or is not above 30 on January 16th, you keep all your shares and you keep that 91 cents in premium. You sold insurance. Again, you are selling insurance. Now, cash secured put is allowing someone who is in a falling knife to be able to sell you the shares, okay? Now, someone who's buying insurance on a call, right, is the opposite direction, right? Somebody who the stock is going down, 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 wants to be able to sell it for higher. Well, you selling your shares, right, is allowing someone that bought your contract and the stock ran, and now instead of it being at 30, it's at 45. It gives that person the right to actually execute their contract and now own shares for 30 when the stock is now at 45. Okay. But you sold insurance. Okay. They were willing to pay you a premium to reserve that right to buy those shares. Okay. Now, what are the rules? Okay. Well, fairly simple. All you need on a chart is a Bollinger Band. How do we set this up? Bollinger Bands. Okay, or BB, not the percentage, not the bandwidth, just BB, okay? And when you have that, you are going to go to here, and the length is going to be 30, okay? If you want our RSI wheel indicator, link in the description, 7-day free trial, go right ahead. We can adjust these settings to overbought, oversold settings, and it'll tell you kind of where you should be setting some covered calls, okay? Alrighty. So, covered calls happen, top half of the band. You want to go 14 to 45 days out. Default is a 30 delta. So, and it's whatever one is higher in strike. So, for example, right, this tells me 32 delta for a 30 strike. The band tells me 31.42. So, this basically a 30 strike price at a 32 delta, more likely to get pulled away. The band tells me 31.50, so I should really be looking at doing the 31. Whatever one is higher, whether it's the 30 delta is a higher strike or the band is a higher strike, is the one I go with. Whatever one is the highest strike. Yes, it might be less premium, but I also set it because I'm looking for share price appreciation. Now, if you want your shares to get called away more likely, then yeah, you'll go with a lower strike, be okay with that, right? If you think we're at the very top, like, oh man, SoFi's not going any higher, sure enough, go for this, right? Go ahead and collect as much premium. This is your hedge against the stock falling without having to sell your shares right away, right? Stock's at 27. 27.11. I could sign this right now, collect $2.08, and that's like me selling the stock for $29.08. Okay, but you're most likely going to sell it because it is already above that strike price. That is up to you. That is how you manage your position. Just realize what you are signing is what you will have to do come that day. Okay. Can you close positions early? Yes, you can. We'll go through rolling and all that kind of stuff. Let's see here. So cash secure put, red day, bottom band, 30 delta. Okay. And want to own the stock. Those are the 4 rules. Okay. So if SoFi, yes, I want to own the stock. Okay. Yes, it's on the bottom band. Yes, it was a red day. And 30 delta is easy to pick. Okay. Sell put. Let me go to it. 30 delta. So 35 is 26. I would do the 27 delta because that's where the bottom of the band is, and that's the furthest strike away, and it's close enough to 30 delta. Okay. So that's the one I would do on SoFi. Okay. Now, what are the opposite rule, right? I want to sell the stock of SoFi. Yes. It's on the top half of the band. Right now, no. Right? So therefore, I can't do a covered call. I shouldn't do a covered call. Because if I wait, let's just say, right, the stock is 29, top half of the band. That is $2 away from the top of the band. So let's just say right now, this was $2 away from the top of the band, right? Let's just say this was 29, and now I need to go $2 higher. So I need to actually do a 29 strike. Well, what does that look like? Okay, that looks like I'll make $1.22 instead of making 66 cents. That is almost, or is, double the premium. I will make double the premium if I just wait for the stock to get to the top half of the band. That is why we wait for the top half of the band to be there. Okay. So yeah, do I want to sell the stock for a covered call? Is it at the top half of the band? Is it a green day? Those are the 3 things. Okay. So if I see here, for example, sell a put, right, on a red day and my puts got worse, like this should be on a red day on sell a put, this should be positive on sell put, a red day, because the stock is going down in the direction, these premiums should get juicier. And because they didn't, I don't want to do it that day. Okay. Now, apparently, SoFi's premiums got better on Friday for covered calls. See, it went up 5%. These premiums got better 2%, 3%, 5%, 4%. Okay? These premiums got better. That is a day you would look to be doing covered calls if it qualified for everything else, right? Make sure that whatever one you are doing, a sell covered call or a sell put, a cash secured put, make sure the change percentage went up in the direction, or up, the premium got better for the one that you are wanting to place. Okay. I wouldn't be looking to do a put when the premium just got worse for me. Okay. So there's that. Now, when it comes to managing a position, okay, we have a position for PGY. Obviously, yesterday was a bloodbath of a day, of a 9% day for PGY. It was a 9% day for ASTS, right? But overall for the month, we are up. So some stocks have ran 60% in this first half of this month, have ran 60%, and they pulled back 10%. That's going to happen. If you don't think that's going to happen, you might be a little crazy. Okay? Stocks pull back. In order for them to go higher, they have to pull back. Okay? Let me see if somebody sent something on the Discord. Oh, let's see. There's the YouTube. Boom. Chill Investing, live stream. And then you can click on it and you are there. Okay? So we'll update you. Sorry, sidetracked. Alrighty. So, position. So let me go here. So here's PGY. Okay, this was green the day before, but obviously we had a 9% day yesterday down to the downside. Therefore, we're down in the position. So, for example, though, when you lose on a cash secured put, first of all, there's only losing if you close early. So let me rephrase that. If you wanted to close your position early because you don't like it now or something changed in the market, well, on a cash secured put, 10 contracts, that's 1,000 shares, right? That is 1,000 shares of PGY. Okay. Change. Let's see if it'll tell me today's return. Okay. 1,200. We lost $1,200. Okay. What did the stock actually go down that day? If I bought 1,000 shares of that stock and it went down the 9.4%, $2.24. Okay. And what did we lose? So if I wanted to, because whatever, market's crashing, blah, 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 right? And our cash secured put went down $1,220. Well, I just lost half of what I would have lost if I would have just bought 1,000 shares of the company. Okay, so this helps you protect yourself to the downside. Now, do I have to buy these shares? Well, on December 19th, I do. But there's a but in there because you can manage this position. Okay, I can manage this position, and let's say I don't want to own the shares. I think that we need to give this a little bit more time. Okay, so I can go to roll this position. Every brokerage has a rolling opportunity for the most part. So you can hit roll this position, and you always want to roll to a credit. That's pretty much the one rule, is roll to a credit. If you need to know anything, it's roll to a credit. And in simple terms, it's kicking the can down the road. That is all you're doing. I want to own PGY. Yes, but should I just go ahead and execute on December 19th no matter what? No. If I think that the market needs, a month of consolidation, why would I want my money to just sit in common stock and not make me any money for 30 days? I don't want that. Okay. So what can I do? I can do a roll, and all I'm going to do is I can roll to January 16th and buy it for the same price. Well, Colby, why would you do that? Well, I can go ahead and collect a net credit of 70 cents on top of what I've already collected. So I'm going to break out calculators, so stay with me here. All right. What did we initially do for PGY? And I'm going to have to just open up a new tab so I don't have to go back and forth a bunch. Okay. So initially, what did we do? We did a $1.80 credit. Okay. So that means we will own the stock for 25 minus $1.80 is $23.20. Okay. That is currently 60 cents above where the current stock is. Now, obviously, we have another week and a lot can change, but we could also roll. Okay. And if I roll and give us another 34 days of time, they will pay us an additional 70 cents. So what does that mean? 70 cents will come off of this price because I'm collecting it. So now I'll own the stock for $22.50 if it is below $25 on January 16th. Okay. Now, what happens if I want to roll down a strike? Well, this premium needs to be higher than this premium that you're closing it for. So I would have to actually go out further. Maybe I have to go out to February, and now I can roll down to, I can roll pretty far. I can roll down to 21, and they'll still pay me 58 cents. So now, breaking out the calculator, we were at 23.70 or 23.20. Okay, this is what I was going to buy the stock for. Okay, on December 19th. But let's just say I will kick the can to February. We'll just go ahead and buy ourselves a little more time. And guess what? Before February, if this stock goes way up, let's just say it goes back to 25, it goes back to 28, whatever it goes up to, I can close this early for whatever potential total gain I have. And I don't have to wait till the actual expiration date. You can close these early for the gain or for the loss, whatever it may be. Okay. So just because I say February 16th doesn't mean I actually have to wait till February 16th. I've done a few where I've rolled out 2 months, 3 months, and then like 2 or a week later, the stock went way up, depending on which one you're in, way up or way down. And I was able to actually collect 70% of the premium in a week or two and close it and then just reset myself. You're just buying yourself time. You're kicking the can down the road, hoping to make your situation better. But here we are. Right? I'm going to get a net credit of 58 cents. What was the initial credit? $1.80. So a total credit of, $1.80 plus a credit of 58 cents. That's $2.38 in total credit. Okay. The stock, instead of buying it for 25, I'm signing a contract now. I will buy it for 21. That is $4 less a share than I'm currently going to buy the stock for. Okay. So what would my actual break even look like? It would look like this. It would look like 21 minus 32.38, I would get to buy the stock now for $18.62 by giving up 69 days or time change, additional 63 days, 69 days total in the stock market, to better my position. So I would get to lower my costs roughly, what is that, I don't know, that's $5 roughly, four and a half. I would get to better my position by $4.50 by giving up a little bit more time, get to make a little bit more premium. Stock goes back up, premiums go back up. You can close it early. So you can roll to better your position. Just know you're just exchanging your time to better your position. Sometimes it doesn't make sense to roll. And by that, I mean, does it make sense to roll and keep your money tied up for longer, right? You can't just expect the stock's going to go back up right away, but you can expect you to put your money there. You're going to make a little bit more money on your roll. You're going to make an additional 58 cents a share. And again, obviously, if I go up higher, I can make more credit, right? If I did leave it at 25, they'll pay me another 260. So now total, I made $4.40 a share in 3 months, right? There's ways to manage it and roll it so you can better your scenario. Eventually, you're going to have to get assigned. You can't just keep rolling this and rolling it and rolling it. You can for as long as you want, but eventually you should just, one of the things needs to happen, okay? And don't roll if you already are thinking, I should just close this position, okay? But if you want to own the stock, and nothing's changed thesis-wise, but you think the market just needs a little bit more time to get momentum going, or it's in a downturn or in a pullback, right? Then you roll. You buy yourself a little more time, let that thing, consolidate, find its rhythm, start trending back up, and leave your expiration date. Okay? Same thing with covered call. Okay? I don't have any covered calls right now to show you. But it's the same thing. I will sell SoFi for 27. Oh man, we're a week away and SoFi's at 28. Okay, let's roll out 30 days or 60 days or whatever. I usually don't go more than 60 days max. And 60 days only if it's a true opportunity, kind of like this one is. Okay, I can make it pretty much double or more than what I was already going to make. I can roll this down to $4 a share. I can make my situation way better. Now, I'm not doing 60 days for me to make just a little bit more. Like, I want it to make a huge difference. If I did, right, we did January, what can I do? Pretty much same strike. I can't roll down anymore because none of these premiums are higher than this premium, right? So therefore, as long as my situation gets a lot better than what this is offering me by going out an additional month, then it's worth it. Like I said, if I can really roll down to 21, like that's bettering my position and I'm getting a credit, like that's really bettering your position. That is worth a roll. Okay. But on a covered call, you say I'll sell it for 27, stock gets to 28. I roll out 30 days. Instead of selling it for 27, I can now sell it for 28 and get a little bit of money. Sure. If I can roll it out 60 days and instead of it being 28, I can roll it to 30 or 31 and still get a credit, right? That's your balance. But you can still kick the can down the road. But you want to be more proactive than reactive when it comes to rolling. If you see momentum is picking up and it's past your strike price, do not wait for SoFi to be at 32, 33, right? You see momentum's picking up and it's at 20, it's $1 above your strike, not $3, $4, $5, right? You want to do it sooner, okay? Just on the rolling perspective, right? Yeah, I've done it. ASTS, I rolled ASTS like 4 different times. I ended up like, I really didn't want to sell the stock, but I was willing to. But I was able to take that strike price from 75 and roll it out 3 months. I rolled it up to 100, and then the stock came back down from 100 to 55 or whatever, and I was able to close that position for. I obviously kept all my shares and I was able to close it completely for like 90% of the premium just by kicking the can. And then I collected credit the whole time that was happening. So I was making money the whole time. And I didn't want to sell the stock. I didn't end up wanting to sell the stock, but a lot of things have been going for it. All right. Alrighty. So That is the wheel strategy. Now, someone did ask, why did we do a covered or a cash secured put for a strike higher than the current stock? And I think I kind of explained it earlier in the video on why you would do a higher delta, which is because you want to own the stock, right? So it was IREN. Here we are. Okay. We did this just yesterday, or yeah, Friday. All right. And we said we would buy the stock for $42 if it was below 42 on January 16th. Okay. In exchange for that contract, they're willing to pay us almost $6 a contract. Okay. $5.90. So what does that mean? I will actually get to buy, if IREN stays below 42, we will own these shares for $36.10. If the stock goes above 42, which it's held fairly strong, and I will pull up IREN's chart right now. Okay. Here's the top of the band, 70. Here's the bottom of the band, 32. Okay. It's held this support, right? It came up, boom, held support zone right in here. Okay. Boom, it held it and it went higher. What have we done here? Boom, higher. Boom, higher. Boom, okay? Monday is going to be the moment of truth whether or not this turns into a triple bottom or we go lower. CSP is worth taking the risk because what is my risk? Well, I have 36 days if the stock goes lower to just sit here and wait for it to come back up, right? And I get to own it for 36, so I get to own it below the support. I'm not buying it for 40 right now, right? I'm buying it still for, what is the stock? 40? I get to buy it for 36. I'm still buying it for $4 less a share than it currently is right now. I just want to own IREN, and in order to do it, I placed a higher CSP, knowing that if I did get assigned, my cost would actually be 36, okay? I think the stock easily can be way back to their all-time highs easily. 2026 looks really good for data centers and a bunch of that stuff. But that is why we did 42. We wanted the likelihood of getting assigned. And if we don't get assigned because IREN runs, I didn't miss the boat. I still make my $5.90 a share for a stock that didn't stay or go low enough for me to own the stock. Okay? That is why we did $42 instead of a 30 delta. Okay. Because if we did view, let me go to it, sell, put, January 16th. Okay. Here's our 42. And see how it was a big red day? See, these premiums got better for us? That's what you look for. Bottom half of the band, big red day, premiums went up 40%, 30%, whatever it may be. Those are the days you're looking for CSP. Okay. A 30 delta is a 36. I get to buy it for $3 less. That is 33. Okay. But if it stays above 36, I make $3 a share versus basically my $6 a share. So I get to make double the premium, and there's a $3 difference in my cost of ownership. But we're going to see how it plays out. Only time's going to tell. I was willing to own the stock for 36. So, which is right here. It's below your support zone. This is a bear case, 31. I mean, I don't think 20 is coming into play, but 20 does have a lot of consolidation, a lot of support here. Not a whole lot of support. There's a little support here at this 30, 31 range right here. So could we see that? Yes, it could come down, boom, and we bounce back off. And guess what? I still have till January 16th, so it doesn't matter if it comes down here before January 16th. All that matters is where is it on January 16th. Okay. And let's just say Monday rallies. Monday rallies from 40 to 44. Easily can. Has done it many, many times. If it rallies to 44, then this will end up paying us some premium, and we could close it early if we wanted to. It was just such a red day yesterday. It was hard not to want to get into something with a cash secured put. All right. If any questions come up, please join our community. The Discord is Chill Investing. Go ahead and join, completely free. Try our indicators, spreadsheets available, classes, courses are available on the wheel strategy. I will answer any questions you may have. Look forward to it, guys. I will see you guys in there. All right. Thank you.